Okay, is the micro on? Okay, perfect. Enthusiastic customers. I don't know what's in your company. Normally, if you discuss this, you find, first of all, questions, does it really work? And if it works, does it pay off? Well, I brought you here the management summary of the whole presentation. You know I'm from Munich. You know the Oktoberfest, the great beer festival. And I learned there something about enthusiastic customers. And no, it's not what you're thinking about. It's not making them drunk or something like this. But you sometimes see what's happening on the Oktoberfest is something like this. You get a glass of beer like this, a little bit bigger. This is served to the customer. I heard a lot of complaints from the guests. A lot of complaints. But dear colleagues, I never ever heard someone complaining saying there's something wrong with the beer or there's something wrong with the glass. They all cited and talked about the idiot of a waiter who put the beer in the wrong way into the glass. Right? And what's happening in our industry when you talk about enthusiastic customers, sometimes we are served a beer like this, and then we say, look, it can't work. So if you take this only one point from the whole presentation this morning with you, that the question is, could it be that it's perhaps not about the systems, it's not about the customers or the economics or something like this, but perhaps it's us to blame not handling the stuff right. Therefore, let's start with the whole stuff, asking ourselves, does it really pay off, this kind of enthusiastic customer? And I just brought you two curves. It's not from the Allianz group, but it's a real-life case. Here on the upper graph, you see an NPS score. It's just a measure how satisfied or how enthusiastic are the customers. Here the NPS score, so the satisfaction of the customer goes down, and immediately, I'm going also down, here the customers of this very same company, it's a P&C company, drops as well. Now, I'm not a mathematician, but at least it looks for me there's quite a correlation, right? So obviously, on the customer side, it seems to pay off. And even worther, if you take the correlation here, saying on the one hand side, here the different years, on the one hand side, the new business volume, and the customer satisfaction, once again a correlation, and here equals 1 point of the NPS of around 15 million euro new business premium. And you see here the curve going down from 2006 to 2010, and immediately the new business volume drops. And quite frankly, having these numbers in mind, I can't imagine why do we discuss does it pay off or not? Especially if you think about the whole story functions also in the other direction. With this company, in 2011, the NPS went up, and immediately the new business volume also went up. So obviously, yes, the economics behind make sense. There are three drivers. Well, I just gave you some publication, one from Allianz, one from Zurich, and they are all going in the same direction. They are saying, look, they're at the end of the day, the economics behind it, there are three drivers. One is that their enthusiastic customers don't leave the company that often, and there is not that much strong. The second one is they buy more, it's up and cross-selling. And third, well, the promoters are really much more heavily willing to refer your company to other customers and prospects. And the same holds true here for Zurich with their evaluation. They are also coming to the same example, saying, for sure, it pays off to have enthusiastic customer because they are really adding value to the company. So this leaves with a very simple question saying, then how to achieve this? And probably we in the insurance industry can learn a lot from other industries. And now I took just an example from an industry which is, quite frankly, not really sexy. Something like, let's say, the insurance industry. It's about DHL, a parcel deliverer, and they run a huge project and said, why are the customers unsatisfied with us? What's the reason for that? The answer was quite simple, because most of the unsatisfied customer received parcels in this shape. And for sure you're not satisfied because you have the feeling this company doesn't handle my parcel with care. Therefore, I'm not satisfied. Well, the consultancy company went back to the management board of DHL and presented the results, and they said, oh, stop, wait a minute. Not that easy. It's not our fault as DHL. All these customers, well, they didn't make it right, the packaging, and therefore it came in the circumstances to the other guy. So we are not the one to blame. However, it took some time till they understood it's from the customer's perspective side. It's not the question who is to blame and have you done your job right or wrong. It's just about the customer is not satisfied, and then you as a company, you have a problem, even though you're not to blame. And then they came up with what I think a very smart move. They said, well, what about just introducing a new business field? And they came up with these packages, which were in a way that with this kind of packages, the parcel will arrive in a good shape, so the customers are satisfied. And additionally, on top of that, they created a totally new income stream as a new business segment. That's smart. So, and I think this means for our topic in the insurance industry, at the end of the day, it's something about changing our mindset, thinking about the untapped potential and opportunities out there in the market, about a new value chain, and about retaining customers through satisfaction. Okay, because the reason is quite simple. If you think about a journey of an insurance client, well, he starts here in just searching for a contract, the NPS goes up, and then over the time, for some reasons, the NPS drops down, deteriorates year by year by year. And the crucial thing about this is that there are some, in the market, some reasons for cancellation which you as a company, you can't do anything around that. I mean, there are competitors out there, there's price competition, there might be some changes of a tied agent, and suddenly if the NPS goes down, these reasons for cancellations lead a customer really to leave your company. And the question is then about, so what can you do? The first answer is, well, if there's a damage, then, and you handle it in a good way, the NPS once again goes up. Yeah, but I mean, not everyone in the top management is really satisfied if you say, well, produce more claims to raise the NPS. I mean, there might be some other strategies around this, and we found there's one driver beyond 1,000 other ones, which is very often overlooked. It's just about the communication with your client. And therefore we said, well, perhaps we just need to think much more about how do we communicate with our customer, how do we show them appreciation and gratification that they are still with Allianz, that they are still a loyal customer. The only communication so far they got from us was a yearly letter asking for a new premium or even a higher premium. Why not showing really gratification, valuing them personally, and staying on a regular basis in contact with them? And therefore, we just made some further analysis, and with this I found really striking, saying, look here, the overall customer in the insurance industry is really not satisfied, minus 22.6%. But then if these customers have a contact, no matter if the contact is good or bad, the satisfaction rate goes up, and even if then the contact is positive, then the customer satisfaction rockets. So it seems to be that this interaction and communication with your customer is beyond many other things a crucial driver to reach satisfied customers. Therefore, we came up with a loyalty program, which we called Allianz Vorteilsprogramm in Germany. It's just a loyalty program. I don't want to go through the details, only I want to highlight 2 points out of that. The first point is that we clearly decided saying, well, it's not about profitability. So we don't calculate about for the status of the client how much damage he or she has produced, because I mean, therefore the insurance industry is around just to cover the risks. We only want to have it growth focused, which means saying we want that a customer benefits if he stays long with Allianz and has a lot of contracts. Therefore, it's easy to be communicated, understood the whole program. And as we said, if communication is so crucial, then we also need to put it on an electronic version, which means only customers who are willing to give us the email address can participate in this loyalty scheme and benefit from the advantages. And by the way, this is a smart way to get the email addresses, because a lot of your tied agents might be not that willing to share the email addresses with your company, at least in the Allianz world, it is like that. So how does this loyalty program look like? Well, we redesigned the Allianz homepage, and there's now a part, My Allianz, and on the other hand, here's the loyalty program. And if then the customer goes on this page for the loyalty program, he finds a personalized CRM site. He has an overview of all his contracts, and then he can enter the benefit program. And so we linked very closely what you, Jean-François, showed us beforehand. We really try to link and to have this one view over the customer across all different lines of business. So, and then the program in itself is quite simple. We just say, okay, how many different kinds of contracts do you have? What's the duration of the different contracts? Then you sum up the points. So we can tell and every tied agent can also explain very easily to the customer, if you cancel one contract, your point rate will drop down, which means you will drop down on a lower benefit level, or if you sign an additional one, you go one class up. And then there are just the benefits around this, like a yearly present from which you can choose. By the way, we use also these ones then to test the interest of the market in new innovative programs, because it's very easy just to offer them as a yearly sacrifice and a present, a new product or part of a product, and then you can test, are the customers really interested to invest their bonus points in that, or do they choose something else? Or how do you need to reshape the value proposition for this kind of product and features so that they are interested in? Then there's something like competitions and draws, or part of a money can't buy section where we just offer some tickets or things like that. And we combine it really to show them added value, our customers. We combine it with some partners from the retail stores. And here's just a young family, and if they use this kind of program, they can save up to 500 euros per year just dealing with these partners on the retail side within the Allianz loyalty program. And I mean, the rationality behind is very clear. So even if then the premium goes up a few euros, retail customers start thinking, well, do I really want to endanger this 500 euros per year just for €2.50 more premium? Probably not. So this kind of retention helps us to drive the loyalty of our customers, and we found that especially through the regular communication on the electronic devices, the satisfaction level and the NPS scores really rocket science. Well, but that's only the one use and one way how enthusiastic customers can help us. I think the second part is very often overlooked. And this is all the referral part, because we believe there are definitely growth pockets out in the market that is even flat. So then the whole question is just about identify these growth pockets in flat markets, or just like here, this natural selection at work, where's the sweet spot out there, and you need to find that. Well, you may say growth pockets in a flat market can't be. What about this? Here on the vertical axis is just a growth rate of the whole economy in Germany. Here. And then we break it down in, let's say here, financial services, agriculture, or utilities, and you see the different growth rate. If you go in the financial services, you see here the insurance, then the P&C, and suddenly if you break it even more down in the online channel, or the 30 to 90 years old, you suddenly find really growth pockets in a market which overall is flat. And I mean, that's quite logical. A growth rate is nothing else than just an average. And it means the same like putting one feet in the hot oven, the other feet on the cold refrigerator. On average, you're well temperatured, yeah, for sure. But why not finding this hot food in the oven for the really hot spots? And therefore, we started saying, okay, let's do this for the growth segments within the within the market. It's here just the live market, and the dark blue ones is the Allianz spots. And then we break it down in customer segments like age, monthly income, urbanity, and all this stuff. And on the right-hand side, it's always how we're positioned as Allianz compared to the market. And then suddenly you start to understand, okay, they're in a flat market. Let's take the urbanity. There are growth pockets, but then there are also the huge cities where obviously we are positioned in a very weak way. And then we need to start to think about it. Okay, if we find in the market some growth pockets out there, but we are not positioned very well from our sales channels or from our customer base or whatsoever. So how do we need to address these very specific customers, and how can we use especially then the very satisfied customers to address the other ones? And just to give you an example, if you then break this down on the product level, you will find here, sorry, just a term life as one part of an employee benefits market. And you see suddenly here, even the term life market itself at only a very low growth rate, there are some growth pockets out there which are really huge. The same holds true not only for term life, but for example for the supplementary health insurance. Once again, the same growth pockets. And so the question, this leads us to the question then, if there are the growth pockets, are the customers really interested in this kind of products? I've just taken this life and health products. And the interesting thing is, what we found is just saying, look, oops, sorry, all these different customers are really interested in the products and in the topic in itself, because they're saying, well, I'm worrying about my current or future financial status. Well, it differs how old they are, it differs about their health status, which kind of pension plan they have, but they all are worried about and find obviously no solution out there in the market. And on the other hand, here on the right-hand side, if you ask especially the young ones, so if you would know for sure, or someone would have told you that your retirement provision is not sufficient, how would you react? And 45% of the under 40s would say, well, I would save more, which means there's a huge market potential out there. It's just the question how to address. And therefore, François, I'm really happy for your presentation beforehand, because we believe we can't address these customer segments out there with the traditional sales channels, because through the different regions of the world, the traditional sales channel for a young generation is shrinking. It's still important. Absolutely. We need the tied agents. But we can't really address these issues only via the sales, the tied agents. We need here these digital channels. And the interesting stuff is what you already mentioned about it is, if we only talk about internet and think about a desktop, we are much too late. Now the real stuff goes on here on the mobile sector, because most of the people the young ones willing to use the mobile, for example, to track my retirement savings or to get some advice about my financial situation. And if you just concentrate on the desktop and all this stuff, once again, dear colleagues, we are just too late. So okay, now we saw there are some growth pockets out there, we identified it, and it's just the question how to benefit from these market opportunities. And I think probably sometimes we're making it much too complicated. We're thinking about high fancy rocket science stuff. Sometimes I think it's just enough if you're adapting to your target or to your target client, just like here on the picture, and now Edgar's gone, something's going around here, and we have no clue. And perhaps sometimes it's really enough to adapt to our targets. What I mean with that, let's go back to the pension business. If you talk to an employer about his biggest investor's risk, probably the CFO would address it saying, yeah, it's about the interest rate, it's about capital market returns, it's about inflation or whatsoever. Literally nobody comes up with the real biggest risk, and that's about longevity. So if this is his labor force, the youngest will die with 69, and for the others it will also go up till the last one will die with 99. And if the employer gave to his employees a pension promise, he doesn't know for the 30 years how much money he needs to cover the different longevity risks. And the same uncertainty holds true for every individual person there. Do I need, if I talk about my retirement, do I need money till 69 or till 99? How can I avoid that at the end of the money there's some life left? And therefore we said, well, obviously, we need to help our clients then to understand more about their situation. In former, and their retirement situation and the future. In former years, we always tried, perhaps it's a typical over-engineered German approach. We always try to say, we predict the future. And then you start discussing about tax rates in 20 or 30 years, you start discussing about social and labor law, and you end up nowhere because there's totally confusion. Nobody can really predict the future in 30, 40 years' time. Therefore, we said, well, why not turn it around, not predicting, but helping to show different cases. What would it mean if a tax rate goes up, if a retirement age goes up? And therefore, we came up here with, within this My Allianz and the loyalty program with a new feature where the different contracts of the clients are shown. Then he has here the opportunity to choose his retirement age. He can, the Allianz contracts are automatically scanned from the system. He has here the opportunity to put some additional contracts in. Oops. Then he can enter the data from the informations leaflet he gets from the Social Security scheme. It's just 4 numbers. So this is then here the yellow bar, what he can expect from the first pillar. And then we can say, so if you think in today's money, how much money would you need if you would retire right now? We inflate this with 2%, and then we come up here with a pension gap, or how much of his target pension level he already has covered by the different pillars and contracts he already has around. And he found down here some information about the contracts with Allianz, but also from the data from other companies, he put it in. And then he can start playing around, saying, okay, if I really, I have 2 opportunities, if I really want to close to 100% my pension gap, how much more money would I need right now? Or to say, well, that's much too much, I only can afford, let's say, 50 or 80 euros a month, then to calculate how much would that mean, and with this additional savings, how can you close the pension gap? And this will then lead in the second step to some concrete suggestions of products where he can choose, do you really want an optimization under tax circumstances, which would lead to a more inflexible solution, or is it more important for you to have a flexible solution? And he can really just start playing around, and we always offer him here some additional information, what this means for his contracts and the pension gap. And so we do not advise him in the sense saying, this will really be the future for you, but you just give him some security, playing around and saying, okay, now I got a feeling, what does it mean in 20, 30, 40 years' time? What does it mean for my retirement status, and what do I need to do? Okay, and then he just can print it out as a PDF, or he can send all this information analysis directly to a tied agent for the next steps, because we see that a lot of customers, first they want to inform themselves, but then they want to have this discussion with on a personal level with a tied agent. And we believe this is really crucial, because it's all about that we start to understand our clients, and not only verbally or on this outward appearance saying, yeah, we are so customer orientated and we understand our customers, but not really understand them. Because we don't want to end up like here these wolves, wait a minute, isn't anyone here a real sheep? And I think that's happening very often in the insurance industry. We are just covering something and then proclaiming we are so customer orientated and centricity, but at the end of the day it's just only on the front end. Therefore, we said we need to understand with all this stuff of the digital natives. For sure, it's interesting since 2000, the technology that has changed. But quite frankly, if we talk about digital natives, it's not about a faster processor or more fancy stuff or a little bit bigger screen. I think what's all about is to understand is about design, functionality, added value, user orientation. This is what the iPhone really changed in the market. In that sense, the iPhone created this kind of new customer group, digital natives, which really start then to use these devices. And so the technology only helps. The really interesting stuff is to see and to understand what lies behind and what's the difference in the customer orientation. And this holds true for the young ones, And it holds true for the older ones as well. I mean, just think about this. The changed customer mindsets in the more for the older ones. In the 60s, we just sold annuity products like this. And the value proposition was pretty clear. We had this 3-phase life cycle model in mind, saying, okay, we have a long working life period, and then there's a maturity, and it's just about relaxing, security, and we need all this stuff, and then it's fine. And suddenly we understand, and then we see if people retire, they show up on a huge motorcycle here on the T-shirt called "I'm just retired," and for sure these guys won't buy any annuity product in a normal proposition. But if we change it and we understand the changed mindset, saying, okay, what they do need is just now money to live all the dreams of their life, which they were not able to do while they're working. And if you then come up with the very same product, but with a different proposition, just saying, look, we are here to enable you, not only to secure you, to enable you to live your dream after retirement, and really then to buy this motorcycle, trip around the world, whatsoever. And then for sure, at the end of the day, there's this maturity and you need all the traditional security. And you see, it's a totally different approach, even so the product may stay the same. Therefore, coming to a conclusion, for sure it's possible to have this enthusiastic customer. It's an achievable target. For sure it's a key factor of success. But just think about the beer. Avoid the mistakes, or to put it in the words of Gary Larson, this guy says here, now this end is called the Tachomizer after the late Tuck Simons. So thank you for that. That's about, I think this was the last roadblock before the coffee break. So about enthusiastic customers. Thank you.
Thank you.